In its monetary policy report for February 2026, the Central Bank of Sri Lanka notes that Sri Lanka's macroeconomic stability continued to strengthen in 2025, alongside notable progress in implementing critical structural and policy reforms. The central bank highlighted that although the year was marked by both severe domestic and global shocks, the economy demonstrated resilience, underscoring the effectiveness of decisive measures to strengthen policy buffers and the meaningful progress achieved in restoring stability and reinforcing economic fundamentals. The report underscored that marking the end of an 11-month deflationary phase, inflation turned positive in August 2025. Thereafter, inflation accelerated only gradually and remained unchanged for 3 consecutive months through October to December 2025. Despite temporary supply chain disruptions caused by Cyclone Titwa, which placed some upward pressure on food prices in December, overall inflation remained stable. The central bank noted that inflation is projected to accelerate gradually and is expected to move towards the 5% target by the second half of 2026. The increasing trajectory was broadly attributed to the gradual recovery in demand conditions. While both upside and downside risks to the inflation outlook remain, the overall balance of risks is assessed to be broadly neutral over the near and medium term. The Central Bank of Sri Lanka continued its accommodative monetary policy stance in 2025 and thus far in 2026. Since the reduction of the overnight policy rate by 25 basis points in May 2025 to 7.75%, the policy interest rate was maintained at the same level. The continuation of this policy stance was largely supported by the persistence of low inflation and the benign inflation outlook in the context of a gradual recovery of overall demand. Meanwhile, economic growth for 2026 is currently projected to be in the range of 4% to 5%, continuing the growth momentum recorded in the previous 2 years. The CBSL noted that growth is expected to remain modest over the medium term. However, prospects are subject to considerable uncertainty due to the volatile global geopolitical environment and any possible positive spillovers from the ongoing structural reforms in the economy. Downside risks to growth projections in the near to medium term could arise due to global trade frictions and elevated geopolitical uncertainty, which may negatively affect growth in key trading partners and major tourism source markets.